Hey traders, these are the three questions that I've been getting the most as we've begun this rather challenging start to 2023. And these are the main questions. Are we going to stay in chop? Are we going to see more daily time frame opportunities? And is day trading still my go-to strategy? All right, let's tackle the first one. And the truth of the matter is, no one can know this, gang. No one can know. Because that's as if we know what the future holds. You know me. If you've attended any of the trading sessions in the options room, the futures room, or my sector secrets mastery, I've mentioned that, hey, my crystal ball has been in the shop since the day I started trading. And I don't want to pretend I know what price is going to do. I do want to encourage traders to know what to do if prices reach certain levels. So rather than predicting levels, let's talk about which levels we're going to react at. By the way, we are in chop still in the broader averages, but there are a number of places where we're not in chop. And those are going to be corners of the market that are more specific to certain sectors, whether that be, for example, and I'm going to switch the daily time frame here, whether that be looking at things like XLI and asking ourselves, hey, are there stocks within the industrials, which is most definitely best paired with the Dow? Are there stocks in the industrials that are in an uptrend? Here's RTX. Absolutely. What about healthcare? Do we have stocks in the healthcare corner of the market that are in uptrends? Absolutely. So when we think about index sector stock and a top-down approach, we're going to be hard-pressed to find trending clarity in the indices, even in some of the major sectors, but we will be able to find those trends up or down, by the way, in individual stocks. So this is where I did a video the other day that was all about which stocks are important for futures traders to watch. So revisit that and it should make a lot of sense as far as how I'm thinking about this first question. Again, no one can know. Are we going to see more daily time frame opportunities? And I'll tell you what, again, no one can know, but not at the moment. Not at the moment. There are a handful of trends that I am trading, and most of those are in individual stocks. And most of those are going to remain rather short in terms of 2 to 3 days to possibly 2 to 3 weeks, right? 2 to 3 days to 2 to 3 weeks in duration or in time horizon. So no, I'm not anticipating a lot of trends on the daily. In fact, the trends on the daily, even when they do organize, getting the pullbacks and then the follow through, as we know throughout 2022, has been notoriously difficult. So I'm not going to say that all of a sudden 2023 brings us clarity and follow through. So it's not as much as I don't know, it's just we don't have it now. And that brings us to the last question, probably the most important is day trading still my go-to strategy? It is, and for most of you, you know that the 5-minute is my preference, but a lot of folks ask, Rog, what about slightly longer term intraday setups? And I'm all for them. But my big thing, the thing that I think that I bring to the table and that I want to continue to bring to the table is a degree of automation that eliminates the learning curve to certain trending or choppy analysis, right? How do we automate as much as we can to remove bias, to remove error, but invite maybe the daily time frame into the fold? And, intraday, I will continue to and will use my hourly price movement range, right? So I'm looking at the volatility in 60-minute chunks. But what about daily price movement ranges? Aren't there historical volatility levels that we can look at that apply to a session? And there are, right? That's the DPMR versus the HPMR. But how would I use that to trade longer term intraday setups? Well, daily price movement ranges are wider, right? The volatility is larger than, say, that of an intraday 1 hour look. What if we're looking at session to session volatility? And you'll see here, this is the S&P. This is resistance. This is support, right? Once again, this is resistance. Here we have support. And notice that, this is many candles. Each one of these candles represents 60 minutes. So we can be in longer term time frame setups if we use and calibrate to longer term historical volatility, right? That's definitely what I'll be doing a lot more of in 2023. And not because I just want to try it, but because the latter half of 2022 is when I started to ask myself, gosh, how can I bring the 1 hour into the fold? Because the daily's been notoriously difficult. The 5-minute is great, but how do I supplement short-term time horizons and time frames with something a little bit longer? And that's where the 1 hour and the daily price movement ranges start to come into focus, right? And we can do this on any number of symbols because we can pull historical volatility from a lot of different places. So as I know, red is resistance. And by the way, those of you that are already using HPMRs, you get the gist of this because rather than a 60-minute type breakdown, we're now looking at not only what happens session to session, but specific to the day of the week. And this is where this gets very exciting and it's unique. It's not something that is commonly seen. And therefore, we've got these stealthy little levels. All right. So what is the takeaway? What is my recommendation as we go into 2023? I'm going to be very, very choosy about daily time frames that I get into, and I'm going to really require of myself that I focus primarily on trends. And that might mean, say, RTX, or that might mean, Merck and individual stocks that are in trends, in sectors that are not in trends, right? I would be bullish healthcare, and I'd rather be playing healthcare to the long side than, for example, the S&P, right? And even, quite frankly, I'd rather be playing industrials to the long side rather than the Dow. So this is where futures traders have got to ask themselves, where am I focusing? What is my emphasis on watch list building? Am I focusing on trends? And if you want to look at downtrends, look no further than the XLY. Look no further than names like Amazon and Tesla. These were names we talked about in the previous video that I did. So we're not changing what we're doing, but I am going to be looking increasingly at where, for example, instead of just a 5-minute time frame approach to Tesla, can I take a 1 hour time frame approach to Tesla and be in some of these trades for a little bit longer, and obviously covering therefore more ground than, say, a 5-minute chart might give me the latitude to do, right? So please think about the time frames you're using. If the dailies are frustrating, think about a 4 hour or a 1 hour. And if you're still not able to navigate those waters, go down to a 5-minute. So yes, day trading is still very much going to be my go-to strategy, but we're going to start talking more and more about 60-minute time frames and even maybe 240 minutes, so 1 hour and 4 hour charts. Hope that helps. Please leave your questions. We will talk about this a lot more in these free videos. I'm just sort of introducing where I'm heading with this shift as we go into 2023. We'll talk about it in Charts and Coffee, and I'll definitely follow up and give you more examples of what I'm doing with slightly longer term, but intraday time intervals. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.